What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Tonight, we are going to be looking at two charts from today, which was Wednesday, all right, and talking about the simple daily process, all right? We've talked about 3-day setups, 3-day day counts, okay? We've talked about signal days. But all of that is relatively simple, right? It's easy to sort of memorize what 3 days of breakout traders in the market looks like, okay? It's easy to figure out what a close in breakout is, and it's easy to identify those. But what I've seen over my time of making these YouTube videos and talking to people on Discord is that the confusing part is what we're looking for on the day, okay? And so I want to break this down for you, and I want to keep it simple. We're not really going to talk about the master pattern. That's more of a structural thing. We're going to stick to the Stacey method, the simple daily process that we're going to use no matter what day you come to your charts, okay? And I want to just reiterate this to you. I might talk about these trades as if they're obvious, right? Or if they're simple to take, okay? With experience, I just don't want you to feel bad. You know what I mean? Like if it's not obvious to you or if it doesn't seem simple to you, don't feel bad about it, because with experience, the longer you do this, okay, the more obvious things will begin to become for you. Now, if you are applying the simple daily process correctly, if you know what you're looking for, if you know what you want to see, that's really the only way that these trades begin to be obvious. And you might not get an obvious trade every single day. You're going to need to sit on your hands and just wait for that perfect opportunity, that obvious opportunity. And I promise you that it will happen. You will get an obvious trade at some point, even if that means you have to wait and sit on your hands for 3 weeks, okay? You have to be able to do that. Don't worry about missing trades or any of that shit, okay? That does not exist. You can't miss a trade, all right? Just forget about that. Get that out of your brain. You can't miss a trade. When the trade is there, it will be obvious. It will be so obvious that you can't miss it, all right? Now, another thing I wanted to tell you before we get to these charts, because I've become aware that a lot of you don't know like who I am on the Discord, okay? You join my Discord channel, but you don't know who I am. So my username on there is Lost Sloth 1235, okay? So when you see me asking, hey, somebody hit me up, I got time for a phone call or whatever, just know that that is me, Lost Sloth 1235. And that is not just some random person in the Discord saying, call me. You know what I'm saying? All right, so let's get right into these charts. First, we're going to be looking at the NASDAQ. All right. Now, this was not the ideal trade today, but I still feel like it was worth going over. So that's why we're looking at it. Now here we're looking at this 15-minute chart. We're zoomed out. I'm just giving you some perspective, okay? So you can see we've been on a generational run on the NASDAQ, okay? But just from looking at this chart, you can see we're obviously at the high of the month, okay? We're actually at all-time highs. We're trading into all-time highs, right? And a lot of people are afraid of all-time highs, but you don't need to be afraid, okay? Because there are still brilliant shorting opportunities, even though we're in a crazy bull run, all right? So here you can see we have 3 days of breakout traders long in the market. This is a 3-day setup. It's a shorting opportunity. 3 days of breakout traders in the market is a reversal setup, all right? Now, either way you mark this up, whether you start on Friday or you start on Monday, we have 3 days of breakout traders in the market, all right? Now, this type of trade, this setup, this can occur on the 3rd day of breakout traders in the market, or that 3rd day of breakout traders can be a signal day and we're looking for the trade the following day, all right? But here you can say, let's just say we start from Monday, okay? Monday has broken Friday's high. There's our 1st day of breakout traders. Tuesday breaks Monday's high. That's day 2. And then on Wednesday, we have broken out of Tuesday's high. That's our day 3 of breakout traders in the market, okay? With a close in breakout signal day on Tuesday. And a close in breakout just means we have closed above the extreme from the previous day. Okay, so if we have a close in breakout to the upside, that means that Tuesday has closed above the high of Monday. All right. Now, the simple daily process, okay, is just marking off the high and low of the current day. Okay. As the day trades, we're going to be marking off our clear high and low range on the day. All right. And very often this will be session levels. Okay. So as you can see here, I have marked off the Tokyo high and the Tokyo low. All right. From 8 o'clock to 11 o'clock p.m. New York time. Okay. We get a low and we get a high. All right. Now, as we continue to trade throughout the day into the London session, these levels are broken and we will simply redraw our levels. Okay. So now, instead of using the Tokyo high and low, we have a London low and a London high. Okay. This red horizontal line, that's the previous day's high. So we have broken out of the previous day's high. Okay. But when we come to our session, we are using the London lows and London highs as our levels on the day, following this simple daily process. Okay. Now, here I've marked off from 6 a.m. to 9:30 a.m. on the indexes. We are not trading before 9:30. That's why I said that this was not your ideal price action on the day, okay? But it still is very clear and concise. It's so clear, in fact, that you might have considered trading before 9:30. You might have considered trading the pre-market, okay? But from my experience, I'm trying to stay disciplined. I'm trying to follow my rules, okay? So I'm waiting for 9:30. What you do, behind closed doors on your charts, that's up to you, okay? But I suggest waiting till 9:30. The reason why I wanted to show you this, okay, is because of how good it looks. If all of this was moved over, okay? If this was happening at 9:30, we would have had a perfect setup here, okay? So when we get up here, all right, we've traded out of the London highs. Even though we're not at 9:30, we are still past 8 o'clock, okay? So we pump up into the high of the current day, right? Putting in a new high of the day level up here, and then we coil sideways and dump, right? Let's zoom in here. You can see on this 1 minute chart, we have engulfed right here, and then we print this little M pattern, okay? We have a coil sideways. As soon as we break that death line there and we're closing below that EMA, you are in this market, okay? Your stop's going up here or at the high of the day, okay? And you're targeting the opposite side of the range, right? Now, you still could have taken a low-hanging fruit entry on this chart after 9:30, and we'll zoom in and we'll look at this here, okay? So this red line again is 9:30. 9:30 gives us this big bearish candle, and then we coil sideways, all right? For 4 or 5 minutes here, and then we engulf to the downside. This coil right here, as soon as we break through the bottom of that coil, that's like your death line, okay? As soon as we break through there, you're in the market, okay? Stop loss at the structural highs of this pullback or this coil area, right? Targeting the opposite side of the range, whether you're just going to take it to here or whatever, okay? If you're going to hold it longer than that, once you see this W printed here and we break that middle structure, you're out of the market, okay? So you might as well have been targeting this low here. This is still a very easy, simple session scalp, okay? You secure your little 25 to 50 pips on the day, turn the screens off, and move on with your life. Go live your, regular day, okay? But Maybe you decided not to trade this because it was not ideal. You couldn't get in up here at the high of the day or whatever, so you just skipped this market. The train's already left the station. There's absolutely nothing wrong with that. In fact, even if this was the only market you were looking at and you decided to pass it up and you made no money, you should be journaling that as a green day because you stuck to your process, okay? And it's always process over profits. Consistency is what's going to make you money in the long run. To get that consistency, you need to stick to your rules. So if you have a hard rule that says on the indexes you're not trading until 9:30, like me, and you skip this market, you have done everything right. You did not miss a trade, okay? You sat on your hands just like you were supposed to, okay? Now, let's look at this Bitcoin chart, all right? Here, again, we're just zoomed out on a 15-minute chart. We're looking at the bigger picture here, all right? You can see we've put in a peak formation here and started pumping up. Now we've been coiling sideways over here, all right? We have multiple days that are closing higher than the open, okay? 1, 2, 3 days of higher closes. On this day, Monday, we have pumped up, okay? Then on Tuesday, this market has taken out the high and then closed lower. There's our first red day signal day, right? Now, when we close lower like that, we get our first red day. I might just simply say to myself, okay, the next day, I'm looking for another lower close. All right, so I'm looking for a short trade. You can see that over here, we're putting in higher highs. The market is going higher, right? We're putting in higher highs. As long as we're making higher highs, we are looking for a dump and pump scenario in whatever session that we're trading. Okay. But as soon as we flip and we start putting in lower lows, now we are looking for pump and dump scenarios in whatever session that we are trading. Okay. Now, here, bam, let's say you're at your charts. It's Wednesday. It's just before the New York session opens. So this is what you have. This is all before the New York open. All right. We have a clear high and low range from Tokyo. Okay. We have a Tokyo high, a Tokyo low. London stays inside of that range. Okay. We stay inside of that range until the New York open. But that's your simple daily process. There's your two lines. That's all you're trying to do. Find the clear high and low range. Mark off your session levels. We have a Tokyo high, a Tokyo low. We project that horizontally across our charts and we wait for the open, okay? So here is our 8 o'clock open. On the indexes specifically, we're waiting for 9:30, but on everything else, we can be looking at this market as early as 8 o'clock, okay? So we are after 8 o'clock. You can see this market has dumped down and then pumped up, okay? We pump up aggressively. We take out that Tokyo high, just barely pip through it, right? Now, we have not triggered a daily level unless you're considering, the fact that we have broken the previous day's low. Okay, we've broken the previous day's low, which could be considered a signal on the day. Okay, it's a signal that's telling you this market does indeed want to continue lower. All right, but we can completely disregard that. We just still have those levels. Okay, so we're waiting. Even though we have not broken that daily high, like we might want to see for a short trade, we have broken a session high, which is still triggering higher time frame traders into this market in the form of 4-hourly traders. Okay, so this is still a market potentially being driven by higher time frame traders. It's just 4H traders instead of daily traders. Okay, so we break that Tokyo high, then engulf to the downside. All right. Then we coil sideways momentarily. And if we zoom in here, you can still see on this 1-minute chart that we have this M pattern here going into the high of the current day. All right. We can mark off this consolidation box. We can track the middle structure of this M. And as soon as that level is broken, you are in this market. Stop loss at the structural highs of this pullback or at the high of the current day there. Okay. You're in that market. you're targeting the opposite side of that range. So those Tokyo lows, right? Just as an initial target, you could just shut this trade down here and move on. You made a beautiful trade. You just shut it down and move on. Who cares if it moves another 10,000 pips when you leave the screens? You came and you did what you were supposed to do and you leave it alone, okay? But if we do zoom out, we can see that we do have this obvious level to the left as a potential target, okay? And we do indeed come down and take that out before the close of the day, right? So I hope that this video makes sense for you. Just to reiterate, the simple daily process is simply a process of marking off the high and low of the current day, okay? So what I like to tell people, right, is that every day you're going to be tracking the same levels. You're obviously going to have marked off on your charts the previous week's high and low, okay? Those are high impact areas, the previous week's high and low. Obviously, we're going to be marking off the previous day's high and low. Those are also high impact areas, okay? High impact meaning high probability areas, okay? That's obvious. We're tracking those levels all the time. But on the day itself, we are tracking the current day's high and low, all right? As well as tracking the most recent high and low range before the session opens, okay? So again, like in this example, this Tokyo high and Tokyo low holds for the entire day until we come to our New York session, right? Then we break that high and reverse, and you're in the market, right? You're tracking those levels every single day. You're just marking off simple levels. That's it, right? So I hope that this video makes sense to you. We will, continue to go over this as time goes on, but if you want to see more of this immediately, you can find these on my channel. I have a few more videos talking about the daily process and the levels that we're marking off on a daily basis, okay? And how to draw those levels on. So I appreciate y'all, man. And until next time, I hope you continue to free your mind.